Hi, everybody. Welcome back to Profit Matters Live, where we talk about your profit and why it matters. Ashley, we're doing it. Oh, you froze right there. You froze. See, the internet is not all it is cracked up to be.
It's not. This week I've heard so many people saying they're having tech problems, especially me. So yesterday I'm trying to log into LinkedIn, and you get the animals, which animal is shaped the right way. And so I do the verify, it goes to sign in. So I sign in, I do the verify again, I'm back to sign in, and I'm like, boom, my head is going to explode. So I'm the only one having problems, Derek.
I know, right? Well, let's talk about end of month and closing, because this is something we're coming to the end of the year too. So let's get into this a little bit, because I do think that it is a bit of a mystery to most people about how you close out the month or the year and how you sort of finalize books and do all those kind of things. And I think even internal accounting departments, as you've experienced, have a hard time figuring out how to tie up all the loose ends at the end of the year. So let's spend some time chatting about that. It is close to that time. You should start getting prepared. Don't wait until January or worse, April, to start thinking about closing out your year. Tell us a little bit about the closeout procedure. What happens and what are the things that we need to avoid?
Yeah, so there's a couple of things. I think financials should be closed out monthly. And what we see a lot of right now is clients coming to us with internal accounting departments, and they've not actually tied out the balance sheet. So the only way, this is the biggest statement I'm going to make today, the only way to make sure your financial statements are accurate is to tie out the balance sheet, because things get stuck on the balance sheet for sometimes months, sometimes years. And if those things aren't moving from the balance sheet over to your income statement or your P&L, then things are never going to be accurate. Now, people say, how can you guarantee my financial statements are accurate if my balance sheet is accurate? Okay, there may be auto maintenance,
sure,
meals and entertainment, but at the end of the day, your actual net income is accurate. And so that's going to be the most important thing, is, are you tying out your financials every month? So we're going to do a real short podcast today, or live. Yep. Here's what we're going to talk about. There's a few things that we need to focus on, Derek.
Okay.
Number one thing that's preventing us from a timely close, the main bottleneck in Profit Matters, but also in our industry, is getting access to the information we need to close your books timely. This is a huge problem. We're locked out of Shopify, or we can't the bank account, or we never got credit card credentials. And so we're sometimes waiting days, sometimes weeks to get access to statements. To everyone listening, if you want timely closed financial statements, the only thing you have to do is get the information to your accountant, or give them access to get the information on their own. That's number one. The number two thing we see transactions that have been filtered through the bank feed in whatever accounting software you're using, with no vendor or no customer. And I think that's the biggest no-no, because you have 1099s, you have W-2s, you have all different documents that have to go out at year end. And you really need to make sure that every transaction is tied to a customer or vendor. So at month end close, we have all the things to reconcile. We're reconciling every account on the balance sheet. And do we actually have all of the transactions tied to a customer or vendor? So those are the most important things. And then a balance sheet tie out looks like this, because everybody's going, she's talking about a balance sheet tie out. What the hell does that even mean? So here's what it looks like. If I took your balance sheet and I put it in Excel, and I saw bank account 1, bank account 2, credit card accounts receivable, and I started numbering those things, we call it footing, 1, 2, 3, 4, 5, and we go down. Where's the bank statement that shows me the same balance I see on the balance sheet?
Okay.
Looking for a statement or something to confirm that we've looked at it and we know it's correct. We verified all the AP and all the AR is actually correct. And so we put that, and we put the supporting document behind it. So you should be able to support every single line on your balance sheet with some kind of work paper or support that somebody else has signed off on. The number one thing is seeing loans that aren't being properly amortized. All of the principal or all of the interest gets stuck on the balance sheet. And so we're looking for all of those line items.
Is this the line item that you used to call me about all the time and say there's a pull your reports and it says ask Derek? Is that the line item we're talking about?
True. It's true. That's the next.
I printed financial statements for an investor one time, and he's like, "What am I supposed to ask you?" And I'm like, "What are you talking about?" He's like, "There's literally a category called Ask Derek." I'm like, "Oh shit, that's like we haven't closed out the books yet. We still have questions."
That's right. And so ask my accountant or ask Derek. Those accounts pop up because there's transactions that we go, well, I don't know what Derek spent, And so
or the reason for it, right? I think that's part of it sometimes too. It's business moves fast, and it's like, I'm not completely, what was the reason that you bought liquor at, well, there could be a justifiable reason, but you just got to find that out. It's asking the right questions.
Yep. And so the faster you get that information to your team, I'll tell you, we have some people who are meticulous about sending in receipts or shooting us an email and going, hey, I bought liquor today and it was $10,000 and we're doing this giant marketing party. So all of that's going to fall under marketing. And then we go, oh, okay, so we don't even have to ask you. And so some of those things are really important.
That makes sense. Let's talk about that a little bit, because there are some expenses, and here I am. I'm actually asking for financial advice on a financial podcast. I'm looking at my QuickBooks, which I got to turn over to you guys at some point. It's one of these things where I always say, "Well, I'm too small. It's really easy." And then I just logged in here while we're talking, and I'm like, "Oh, there's 87 transactions that I have to figure out where they go." And I'm going to be honest with you: 50 of these are new. 37 of them are ones that have been in here for 9 months, and I've been going, I don't know how the hell to categorize that. So my software is trying to say this is a distribution. And I'm like, well, no, it was actually, because sometimes there's weird things with business, right? Like here I am sitting here I do a lot of like recording and podcasts. If I buy clothes that I exclusively wear, and I can show you, they're hanging up right here in the corner that I exclusively wear on camera. Is that these are all the questions I think we all have about accounting. And not to get into my specific situation right now, but you're right. If you don't close this stuff out, then it just keeps building and building and building. And then by the time I look back and go, why was I at Starbucks in March? And who was I with, and all those kind of things.
Yeah. And let me tell you, here's the number one heartburn for the CPAs. And it's not just here at Profit Matters, it's everywhere. It's these people are trying to put a personal expense through their books, and it's making me feel uneasy about it. And so I think that our next
we're not supposed to run all our personal expenses through our business. What are you trying to say?
I'm telling you. And so I think that there's a fine line, because as a business owner, you should be allowed to take advantage of as many tax saving opportunities as possible.
Yes.
And as a leader here, I try to coach people. There are good people in the world who are not trying to commit some kind of fraud and get you in trouble with your CPA license. But it is our job to take what Derek gives us and put it in the category that Derek tells us to put it in without asking questions. And we put it there. Okay. We could say, all right, Derek, like this really, you went to Gucci and you spent $20,000 last week. Like we're really just trying to feel that out, right?
Yeah.
Put it on the podcast. But there is a level of, Derek's in business for himself so that he can take advantage of the tax saving possibilities, right?
Yeah, right.
So it's a fine line between that. And so I think it's a great topic for the next episode that we talk about.
Yeah. And I'm just going to list out a bunch of things like, okay, so the artwork that's hanging in the background right now, this is exclusively used for my podcast studio. Is that a bit, can I don't know. Like maybe we should talk through this. I don't know. Maybe we have to bring on a tax person too, right? But there's, I think, a lot of questions that we have. And I think we, based upon our personalities, we go one way or the other. We either go to the far extreme of don't include anything, or we don't, or we do too much.
Right.
And, it is funny. It's like, I'm weird about it. Like, even like I said, clothes that I use on camera, because a lot of times, I have a couple different things that I do where I have to make sure I always have the same. And I learned this when we did the TV show, right? It's like, I had an assistant that kept track of everything I wore on every single day and every scene, so that if we ever had to go back and try to recreate something, I was like, well, I got to go find that shirt, right? So there's all these different questions I think many of us have about, work boots. Are work boots something that I can write off if I'm in the construction industry? It would be a good show to talk about and come up with a list of things to talk through.
We'll do that. And we'll even bring Lou, our tax manager, who's been doing this for 45 years. We'll bring her on and we'll just ask her some of the crazy things she's seen also. I think would be really fun.
Yeah. And I think so much in the world's so different today with gig work and things like that I think there's a lot of questions around that it's not just for the construction industry. I think there's a lot of people that are asking a lot of those kind of questions. It's like, hey, if I'm driving Uber and I buy bottled water and put it in my car for my customer, is that, I don't know. I mean, I would think it is, but maybe it isn't. I think it just really depends. And what happens if I drink one of those? Is that okay? Is the IRS, out there with binoculars like, nope, she drank one of those waters. This is all disqualified. But I think that's important to do because it is, in some senses, you've got to be able to justify it with a business reason, I think, is how you tie that together.
Right. Absolutely.
And that's really to your point on everything. It's like you got to tie this stuff up. But as an entrepreneur, knowing how to be able to categorize it properly really does help your accountant. Because I remember one of the companies you and I worked on before, I think you guys sent me 6,000 items the first month. And we're like, what are these?
It's a beating.
Yeah. And if you've ever been audited, I mean, I've never been audited by the IRS, but I've been audited by auditors, right? Where, running a company and you have an audit team and that audit team comes in and they're like, hey, I need you to explain to me how 11 months ago you went to Starbucks and spent $34. Like, what was that all about? And what was the business purpose? And who were the people that were with you? And you're like, feel like you're under interrogation. I mean, you literally, accountants are the Sherlock Holmes of the world, right? I mean, you guys are the detectives who are trying to figure it out, and you better get your story straight because if it's not, you can get yourself in a lot of trouble.
It's crazy. I mean, it just works so much better if you have an expense management tool and you're taking pictures of every receipt and you're just writing what it's for. Like that, at the end of the day, solves you having to figure out what anything is for, and that's part of a timely close process.
Is that like a Concur or something like that? Like one of those pieces of software that do that?
There's a lot of them out there now, like Airbase will pay your bills like Bill.com, but also do all of the expense management. Also, Ramp is one of the best I've seen. It'll categorize your transaction. It uses all the AI to enter the bills. And so we're using it for bill pay. You can actually pay with a credit card.
What's it called again?
Ramp.com. Check it out. Works with QuickBooks, works with Sage. The only thing about Ramp is it doesn't work in construction very well because we don't have the projects that we can tie to with the items, products, and services. But we've talked to Ramp about it and they're working on it for us because what we've seen out there, Ramp is actually the best option right now for bill pay and expense management all in one. Very cool. You'll have to check it out. Okay.
Well, hey, folks, until next time. And if you've got ideas or questions or suggestions on things that you'd like us to talk about, please do reach out to us. I think hello@profitmatters.co is probably the best.
Yep, that's right.
Yeah, so reach out at that or hit us up on the social, put it in the comments, that kind of things. But I really do like this. Let's bring Lou on because I'd really like to, I don't know if we want to go through my books live on the air, but I can ask lots of questions and give you lots of justifications as to why I expense the things that I expense. But I do think, it's a slippery slope and you have to be very, very careful with what you do, but you also want to make sure you get the maximum amount of things. If those are things that are being invested into your business, you got to be able to take advantage of that. Ashley, thanks so much for the time.
Thanks, Derek.
We'll see you next time. Okay, you too. Bye-bye.